So if you've recently heard of the QBI deduction or qualified business income deduction and you're curious, or maybe you want to know a little bit more about it but don't want to dive in and spend hours researching, then this video is for you. Hi, I'm John Norberg and welcome to the Financial Prof series. So in today's video we're going to go through the highlights of the QBI deduction, one of the most underutilized elements of the 2018 Tax Cuts and Jobs Act. So let's get this party started. What is it? The QBI deduction. It's a 20% deduction off of your qualified business income or your ordinary income. Now, how does that work? Basically, the IRS has you calculate both, and then whichever is the lesser amount from ordinary income or from qualified business income, that's the one you get to take. For most people whose business is their primary source of income, far more likely than not, it'll probably be coming off of your ordinary income. Now, if you make $383,900 or less here in 2024 as a married couple, or $191,950 or less as a single filer, you can be eligible for the full deduction. If you make more than that, it gets a little more complicated. We can talk. The thing to remember, though, is that not all businesses qualify. If you are a specified service trade or business, or SSTB, there's an element that you might not be eligible for, or possibly no eligibility whatsoever. I'll give you an example. If you're in the field of law, or perhaps medicine, or another one is financial services, for instance, I can't take the deduction. But there are a lot of businesses that can. What I see, though, is that a lot more businesses think they're not eligible and stop there than actually are. In fact, I'll give you another example. Let's say you're a doctor. We work with a lot of doctors here at Norberg Wealth Management. You can't take the deduction on the income resulting from the direct practice of your medicine. However, let's say that attached to your practice you have a health club. You could, in theory, take the deduction on the revenue generated by that health club, because that's not a direct practice of medicine, which is a SSTB. Again, not eligible. So that's just one example. Another example would be, again, let's say you practice law. You're an attorney, right? You wouldn't be able to take the deduction on the money that you're making from your practice of law. However, let's say you have a few rental properties in an LLC. Guess what? That's a business that is specifically mentioned by the Internal Revenue Service as being eligible for this deduction. So you could, in theory, take the QBI deduction off of the income from that rental business. So there are a few other ifs, ands, or gotchas that you want to be aware of when you're calculating QBI. But for very simplified purposes, let's say you're a manufacturing business and you take home $350K per year for your personal ordinary income. You would be eligible to potentially take up to 20% of that amount, and you could do this for every year that the QBI remains in place. So in other words, for the year 2024, we'd be talking about an amount of probably about $70,000 or so that you could take right off the top of that taxable income. The thing to remember, though, is that the QBI deduction does go away. So in 2025, that's the last year you can use this. So really, it's just this year and next year. The other thing to keep in mind as you're doing a little tax planning is that you balance your ordinary income and your qualified business income to make sure that you're taking the best advantage of this deduction. Because again, remember, IRS has you calculate both, and you get to take the lesser of the two. So, quick recap from the top. It is a 20% deduction off of your qualified business income or ordinary income. It is available if you are not a specified service trade or business, but you do have a business interest, and this could even be something like driving Uber on the side, if that's your thing. And the other thing to remember, it does go away at the end of 2025. So, if you're curious about it and you're thinking about taking advantage of it here this year in 2024, we should probably talk soon. We're happy to work with your CPA or accountant on this as well. Give us a call. In the meantime, drop a like and a subscribe, and hope to see you out there.